Welcome back to the show. This is Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Littlequist, and we are having some fun talking about the financial markets today. It's been a good show. We got into the income strategies on the first couple segments. We talked about why it's important to not chase your trades and let for price come to you. That way you can take the emotion out of trading and investing. We got into a lot of the retirement accounts on that last segment. We got more to talk about that here on this segment on 401ks and IRAs. But if you missed investing tickets, investing class tickets for the class here, local here, you can just text the word investing to the number 210-210, and that's for 2 seats for this class, plus a financial quick start kit to get started. Text the word investing to the number 210-210. If you want to check out the podcast, you can check it out live when we do that on Apple Podcasts, iHeartRadio, and Spotify, or on YouTube. You can see that as well. But also, if you have questions, make sure to put any questions or any stocks you want us to peek at, any analysis, and we'll try to do that on the next show. You can do that as well. So, in that last segment, Al, we talked about how to protect really yourself in any circumstance, whether you're driving, your home, your retirement accounts, your 401ks and IRAs. You have to protect from loss. Mm-hmm. And that's what we do in our everyday lives. But I think people are so conditioned to just let their 401ks go and I don't even look at it. I just let them take care of it. I'm young enough. I just let it sit there. And I think that's such a bad advice that we've gotten from our parents and people that have really went through the stage of the 80s and 90s where that actually worked. And that's a long time ago. Mm-hmm. So you can't afford to just let things just sit there. If you're in your 30s, 40s, 50s right now, or even 60s, and you want to be able to retire, it's time to pay attention to that stuff. So that's just doing things a little bit differently. Right. Pay attention to the hard-earned money that you work so hard for all your life. And that's what you have to live off of. And you mentioned on the last segment, studies say you need $1 million. Well, that's all relative, right?
That was before. You need more
correct.
than $1 million now.
Correct. But yeah, that's all relative as well. If you make $100,000 a year, which a lot of people are, that's 10 years. Mm-hmm. That's 10 years of living. I mean, what, are you going to retire at 90 then? So there are strategies that you can apply in your retirement accounts. That's your money. I want you to talk a little bit about how to self-direct your own retirement account, because I think it's so paramount to be able to do that yourself. Eliminate the fees and then have your best interest.
Yeah, I think you kind of used an analogy there with people that they just let their 401ks go, sort of like putting it on cruise control. Mm-hmm. It's like putting your car on cruise control and then crawling in the back seat to take a nap, and just hoping that the cruise control works.
And we're seeing those self-driving cars can't even do that.
They can't even do that properly or safely at this point. But and then protection was another thing that you mentioned. Think about this. If your 401ks or your retirement account was down 25%, were you protected? How were you protected? Ask your financial advisor, if you have one, your plan sponsor, how they protected you. And the answer is they really weren't. The only thing they might say is, well, you had the opportunity to be diversified. Well, being diversified is good, but you have to be diversified the proper way.
Let me ask you this, Al. If you're in oil stock, tech stocks, consumer staple stock, all those different stocks.
Right.
What happens when the stock market goes down?
Everything goes down with it.
How diversified are you?
Think about this. If you have a bathtub full of water and you pull the plug on the bathtub, you can't point to a section of the water and say, don't go down. It all gets sucked down at the same time. The correlation between stocks, it becomes extremely high during bear markets or corrections. And that's the problem. You're diversified within the stock market, but it's all the same asset class.
Let me ask you this. What if people have multiple mutual funds? Is that diversified? Is that good?
It's the same thing. You're still in the same asset class because mutual funds are stocks. It's a combination of stocks.
So it's garbage or garbage.
Exactly. You have to be properly diversified, to have the proper asset allocation, you need to have things that are not correlated to each other.
What would be an example?
Well, it could be some things in the stock market, maybe some individual bonds, maybe some currencies, maybe some precious metals.
Some different assets.
Could be real estate. They're assets that are not necessarily correlated, or in some cases might be inversely correlated.
Mm-hmm. You mentioned a couple different asset classes, futures and forex, which we haven't really covered on this show a little bit. But just in one or two sentences, what is the Forex market?
The Forex market, that's the foreign exchange market, and that's where you are looking at the difference in exchange rates between two different currencies.
Okay.
You're trading two different currencies, but it trades as one. There's one symbol. It's one position.
But just like a stock would trade.
Just like a stock would trade.
How about
trades 24 hours a day.
Okay.
And the futures market it's a family of things. I mentioned diversification. It's a family of things, some of which have no diversification, some of which are inversely correlated, some are which are correlated.
So an example would be if the stock market is up, is that going to affect the price of lean hogs?
Not at all.
There
Not
you
at
go.
all. So there's no correlation there.
Okay, we haven't talked about lean hogs for
No,
a while.
we haven't. That
that's my favorite.
is your favorite, and you still haven't told us why.
No,
one day
I
maybe
will.
you will.
One day I will.
Yeah, and sugar in the S&P 500. There's no correlation there, but there would be correlation between, say, the stock markets and oil, or the stock markets and gold. So you can put together a truly diversified portfolio within that futures family. Futures trades almost 24 hours a day.
Okay, perfect. So if you want to be able to do that, you have to self-direct, right?
You can sell, and you can trade the futures market, the foreign exchange market, the options market, another one we haven't talked about. Those three assets are what we call leveraged assets.
So you can do that in an IRA.
You can do that in an IRA. You have the ability to do that, which allows you to not only participate in up markets, but in down markets, in sideways markets.
Participate how?
Participate with an investment in futures or Forex or options.
So what does that mean? Does it to benefit?
Absolutely, yeah. This is why you want to be in the market, to achieve as much benefit as you can.
So there are strategies in your retirement accounts to profit as the market's declining.
Exactly,
Okay.
and the strategies. It's sort of like the clubs in someone's golf bag. The different clubs are used for different parts of the game. Different strategies and different assets are used for different situations within the markets and the economy.
Yeah, that was a great example. We were just at the golf show this week, and I think a lot of golfers understand that. You don't use the same club.
Nope.
You don't use your putter to drive. I mean, some of us may have tried that, but I'll tell you what, it doesn't go very far, and you may have a miss hit that way.
For some of us, it wouldn't make any difference what club we used. We still aren't going to do well.
Al, you can't use a hockey stick, okay?
Yeah, that might be my biggest mistake.
Although Happy Gilmore did very well with that.
He did. So, but the other thing about those assets, the futures, Forex, and options assets or strategies that you can use with them, is that they have leverage. So futures and Forex trade 24 hours a day, which gives you great opportunity.
Flexibility.
Right, flexibility. But the leverage enhances the value of your investments without increasing the cost of the investment. In other words, it's sort of like a mortgage on a house. You don't have to have $400,000 sitting in on your dining room table or your bedroom to go in and buy a $400,000 house. Typically, you're going to take out a mortgage and maybe put $30,000 down. You can do the same thing in the financial markets, where you can have a very small account but control something that's a multiple of that. That's how, and I think you mentioned earlier, how do you come out of the hole that your portfolio might be in right now? Well, just following what's kind of the go-to isn't going to get you very far very fast. These leveraged assets give you that opportunity. The potential return on your investment can be significant.
Yeah, I like how you explain that, because I was actually having a conversation with my dad again. It was this week, and we were talking about, well, if you don't have all your money in the market, how are you going to make any money? Well, if you have all your money in the market, you are 100% at risk in the market. Mm-hmm. That's why in these down markets, you see such huge declines in your overall portfolio amount. So by using less capital in the market, for one, protects yourself, but also you can be more efficient in a leveraged asset with the smaller amount of capital. So say, for example, if you have $100,000 in your account and you trade stocks, you need that $100,000 to be able to be efficient. If you trade Forex, that being a 50-to-1 leverage, $2,000 will do exactly the same thing as that $100,000 stock account will do as far as buying power.
Exactly.
That's why you want to be capital efficient with these leveraged assets. And we cover that in these investing classes, Al. We go through what the futures market is, what the options market is, which is a phenomenal market. That's like the SUV of trading and investing, income strategies and 401k strategies. And with these classes that we do here locally, we introduce you that. And that's why they're so much fun, because it's like new techniques and concepts. Not changing things, just doing things a little bit differently. So I want to invite people one last time to this investing class by texting the word investing to the number 210 for 2 seats. When you do that, you can receive 2 seats and a quick start kit just to get started. When you do that, actually, too, text in the word investing. After that, text the word Al, because Al will be teaching a lot of the upcoming classes here. Text the word Al, and that's the instructor that you want for this class. So text that investing to the number 210 for 2 seats, and then right after that, put Al, and he can be the instructor for the class. So Al, you always have great words of wisdom this week, and a lot of techniques and concepts, and our listeners appreciate that. They also appreciate the OTA tip of the week. Let's hear it.
Well, you know, Josh, too often, too many people talk themselves out of exploring the opportunities that are available because they're convinced that there's little chance that they'll succeed. You know, the truth is you can't succeed unless you try. Successful people, successful investors have the courage to do what initially they might be afraid to do. Success, basically, is just the result of doing the right things the right way repeatedly over time. If you do that, it works. In fact, 99% of the time, if things don't work, it's the person not doing those things, not that those things won't work.
Yeah, you really kind of made me think about a quote. I can't quote who said this, but you might remember, Alice. If you think you can or you think you can't, you're right. It's not doing things new. It's nothing's new. It's just doing things a little bit different. That's been the theme of the show here today. Text the word investing to the number 210 for 2 seats for this class. As always, same time, same place next week. Until then, retire young, my friends.